In conversation with the top management of CIPLA, they came out with their numbers today. Umang Vohra joins us. Thanks, Umang, for speaking to us on BloombergQuint. Good numbers after a while, and the best thing that I found was no adjustments this time around, because over the past few quarters there have been. Firstly, let's talk about the individual business. US was good, $135 million, and that does not include Sensipar this time around. How are you looking to grow here because of that exclusivity loss that has happened? How will traction move over the next few quarters?
So in the US, Darshan, if you really look at it, I think on Sensipar, we've seen a significant reduction from the previous quarter. It's baked into the numbers, and I think we are looking at our pipeline resuming launches in Q4. So, we've taken a slight break in these limited competition launches in the quarters, and I think Q4, Q1 and Q2, hopefully we'll have our launches back on. So the growth from here will really depend on new launches and not so much on core volume growth, as you might say. So next quarter, it might be marginally lower than this because the Sensipar thing, but right now Sensipar is almost like a regular generic. It's got a high competition. We've retained some share, but it's got high competition. And so, we're looking forward to this normalizing over.
Which are the products that, that CIPLA has in its pipeline that will likely replace the loss? That's
so one or two of them we've been public with.
Yeah.
For example, albuterol we've been public about. But other than that, we don't guide too much about product-specific details. But I think there is a launch pipeline that we have lined.
In your press release, you spoke about Advair also this time around.
Yeah.
What's the update there? How can this be a product? When can a possible launch happen? And what kind of market are you looking here?
So Advair is probably going to be filed only in Q4. So we are clearly about 2 years away, definitely from a perspective of launching the product. But the clinical trial is on track, and we're hoping to file it in Q4 if the results come out nicely.
India was pretty impressive this time around, a 6% growth on a YOY basis, much higher than the estimates, even on a quarterly basis. And on quarterly, obviously, there was this flow over from the first quarter. My first question here is, are the adjustments done? Are you done? Because in the first quarter, there were a bit of adjustments. This quarter, there is not, but over the next few quarters, do you see any of that residual adjustment coming into play?
So actually in India, the flow from the quarter is not there because whatever we had as an opening cutoff, we have the same amount as close. So I think more or less the numbers are how they're represented. On the adjustment side, look, we had the trade generic business and we had guided saying that in this quarter, our trade generic business will roughly come to the same level in terms of billing numbers compared to the previous year. And I think it's done that. And the real growth will start in Q3, Q4, which is what we're looking at. The prescription branded business has done well. It's grown at about 13%. And we're hoping that it'll continue to show double-digit growth in Q3 and Q4.
What other traction, what other avenues are there for growth in the Indian market? Obviously, your trade generics did well. It will start firing in the third quarter, as you pointed out, and you got guided for that, and that's what the exact same statement that you're saying now. Apart from this, what else will drive India business?
So I think we're looking at core volume growth. We're looking at a lot of work in therapies. We're looking at readjusting to a distribution environment which is changing. Right? There are lots of aggregators. There are lots of new models coming up in distribution. All of them is what we're looking at as changes. So we're trying to keep a track on it. India is a huge country. We see different pockets of volume growth compared to historically how we've seen it. So I think it's a mix of all that, Darshan.
What's the update on the tender business on South Africa? Obviously, there has been some pricing pressure and pricing has been moved lower also on some tenders. Can you explain what exactly is happening there?
So the pricing is already lower. We're not seeing the type of growth that we used to see historically in it, but we had already mentioned that we won't see that growth. I think we're managing that business for profitability. We are trying to be as careful about it. But I think this quarter is slightly better than the previous quarter on the tender business in South Africa as well. But we're overly excited about the private market business. That's growing at 12-13%, continues to show that growth. It's a really strong business for us in South Africa.
What about the other markets? I think Europe did well, emerging markets. They all came in line with what was anticipated, no negative surprise there. How is traction going to be over the next few quarters in these businesses?
So emerging markets have this little bit of issue with geopolitical tensions. We are slightly more indexed in the Middle East and Africa, right? North Africa and Middle East. We are more indexed there. And so when you look at the geopolitical tension there, protests in Lebanon, the issues in Syria, whatever's happening with the trade embargo, this morning there was an article on some portion of the world where conflicts happen. So when you look at all of that, I think this business goes through a little bit of a wave, depending on whether there's credit is available, not available in the markets and things like that. So I think emerging will continue to be a little bit challenged in the rest of the year. But having said that, we're trying to look at how we can diversify into bigger markets like China, etc., where we've already started work.
The other aspect is the tax rate. Obviously, now a lot of corporates will avail of lower tax rate. This quarter, I don't think you have availed too much of that benefit. Yeah. But how will tax rates be over the next few quarters?
So I think we were already at about a 28% tax rate. I think for this year, it won't materially change because we're electing to adopt the new tax rate in the next year. We see about a 2-3% improvement in our overall tax thing, which means because if you add all the taxes, you anyway come up to 25% for corporations. I think that's roughly going to be our ETR going forward, not this year, but the year after that.
What's the R&D spend? Because I believe as a percentage of sales, it was lower this time around.
That's right, but it's probably a phasing issue. We're still guiding to about that 6.5 to 7.5% range in R&D.
What's the A&A pipeline for CIPLA?
So we will file close to about 15 products. We are partnering now with a lot of products as well. So as our partners begin to file, we will begin to see that. So we've curtailed our filings because we are now being very selective considering the environment in the US about what we file. So I don't think we'll ever be more than 20 filings a year between us and our partners combined. But they will be fairly meaningful filings, each one of them.
A couple of other questions on the compliance end. Obviously, Kedar had spoken once the 483 was out on the plant, on the Goa plant. What's your perspective? The observations, when I read it, it didn't sound serious, but the 12 is not a small number. But what's your reading of this? Will you be able to say that you'll get out of this, or are you expecting an OAI on this one?
So I'm not the judge to say whether it's an OAI or not. All I do know is that the number of observations is no limiter. You can get a OAI status with 1, you cannot get it with 18. So we had 18 observations in Kurkum, and the agency was satisfied with the response, and we committed to a fairly aggressive corrective and preventive action, which we implemented. So right now where we are, Darshan, is we've answered the queries, right? We've committed to a certain corrective and preventive action, which is already in place, and regular updates will be provided to the agency. It's the agency's determination, but we feel confident with our response.
What about any other plants? News was also floating around that there's an inspection at the PATALGANGA plant also. Can you clear all those things? Is there any other plant in which the FDA has asked you whether they're going to come or currently going on?
So routine inspections by the FDA are triggered well in advance. So we know that there will be inspections happening starting January of next year at some of our other facilities. And yes, PATALGANGA is going through an audit right now, right? But it's a routine audit. It was a well-planned and it's a routine audit.
Okay, and my final question is, it's already half of the year is over. How do you, I don't want a clear guidance because you all don't give, but give us a sense of, how the second half will be. Because as you said, that third quarter will be a pause. So US probably will be lower this time around, but the trade generics will make up for it. So how will the next 2 quarters be for CIPLA?
So we're still looking at, I don't want to guide on top line, but we're looking at growth coming in from the previous year levels on the top line. May not be 10%, maybe slightly lower than that year on year. But we're guided at 18 to 20% range at the beginning of the year on EBITDA. I think we will end up in that range in quarter 3. And also the full year basis probably slightly on the higher side of that range.
Okay, Umang, thank you so much for speaking to BloombergQuint, and all the best for the
Thank you very much.
So people, when they invest and the calls go right, their investment decision goes right, they book profits early. If I invest and it doesn't go right, I tend to marry that stock.
If we can educate, if we can make investors aware about the long-term potential of the investment into equities, that will definitely help the asset class.